Hello, welcome to Market Atlas. Today we're going to be discussing the critical 200-week SMA that Bitcoin is currently trying to break down from. To do this, we're going to go back in history and study some of the periods that Bitcoin's price had been challenged by such moving averages, which are the 100, 200, and 300-week SMAs, and how Bitcoin behaved around it. And then maybe we can infer some of those ideas back to the current situation of the 200-week SMA challenging Bitcoin's price. Before we continue, my name is Mo, and I've been a crypto and micro market speculator for the past 5 years with real capital, but I've been analyzing and researching crypto for the past 7 years. I hope you enjoy this video and you can learn something from it. If you do please leave a like, and if you would like more content like this and analysis that is more driven by statistics and real behavior, real price behavior, rather than hype, then consider subscribing. So usually the first lesson we can learn from analyzing such periods is that Bitcoin's price, when challenged by such moving averages, actually breaks fairly quickly. So 1 to 2 weeks maximum, Bitcoin price should break from these moving averages if it were to break down. We do not really need to go so far to see this happening. We could just go back to January 2026 and you would see when the 100-week SMA had been challenging Bitcoin's price, and it only took Bitcoin around 8 days to break down from it, right? Yeah, around 8 days. And when we broke down from it, it was pretty aggressive. That's one observation we can see. Now, we can go to the previous bear market cycle. So our analysis is going to be really trying to understand current conditions as well, right? So data can say a lot, but in different market conditions, data can say different things. One of them is actually the open interest and the liquidation things. So in trending periods, for example, price follows liquidation, where's the highest liquidation areas. But in trending markets, the price doesn't care. The price will go where it goes, despite there being a lot of leverage sitting up or down. That's one thing I've actually noticed along the way. So we're going to study mostly bear markets, but we're going to also analyze the caveats in the bull markets and what they can tell us about how things can go different, right? And remember, this is not really financial advice. It's for educational purposes only. So it's for inspiration and giving ideas and maybe helping you in your trading setup, right? Which I'm sure it will, because it has helped me along the way. And so far, I've been a profitable investor, which is hard to say. 80% of traders are unfortunately unprofitable, but that's due to themselves getting what they want from the market. So everybody gets what they want from the market. That's what the famous Etsikora says. And really, if you're starting the first 1 to 2 years of your trading career, then just understand you're going to have to pay the tuition fee. And the tuition fee is as expensive as you make it. So I do suggest the first 2 years of your trading career, if you're a beginner, then make sure your capital is reduced accordingly, because whatever you're going to put, imagine that money is lost, at least for the first 2 years. If you're very smart, then probably you would make on the first month. Who knows, right? Yeah, with that said, we can go back to the previous bear market cycle and we see how Bitcoin behaves in such periods. Here, we had a similar challenge, which it was the 100-week SMA. And in that instant, the breakdown was pretty near the 100-week SMA. So there are 2 different ways on how Bitcoin behaves in such periods. And one of them is when we're trending near the moving average, and another period when we're trending above and breaking down heavily from above it, right? So that is our current period. The previous example was you were using a resistance, and this one is we're really trending above it. We had broken down aggressively just at it, right? So you would say around this level. That's where we had broken down, and it coincided with the moving average. And in that period, you get a violent drawdown, and again, that happened in around 3 days, right? So a few days. 3 days we had a confirmed breakdown. If you really want to confirm it, then this is 3 days. That had been when the breakdown had been confirmed. And on that leg, we had fallen to below the next moving average, so the 200-week SMA. Now, we could even go to a previous bear market cycle, and we see the same moving average playing around. Okay, so when Bitcoin broke below that moving average, it happened very quickly and very aggressively, and it happened in a single day. It found support in the next moving average, as Bitcoin price did right here, in a way. It found it as a support a little bit and then flipped it into resistance, tried to fake out from it, but then we fell below it again. So that one was a little bit different, right? So all of them have their own flavor, but what we can really see is that when Bitcoin price breaks from those levels, those moving averages, then it does break heavily and aggressively, especially when the price is trending around that moving average, okay? In a similar manner to how it happened here. You can see all that moving average, the 100-week SMA, had seen aggressive declines, and the price had always been trending near that moving average and before breaking below it aggressively. On the other hand, we can see that the 200-week SMA has formed very good resistance, right, and support for Bitcoin price. So here and around there, right? Bitcoin price did break below it, but it broke above it again, and it acted as resistant, where before actually breaking down to the next moving average, which was the 300-week SMA. Now, that's one of the observations we can see in bear markets. Now, one caveat is here, where Bitcoin price actually did not break below it so aggressively, so quickly, right? So it broke below, broke above, and then we use a support before breaking below again. And this one again happened. If we disregard that one, then it also happened within less than 2 weeks, so a few days, right? One thing we can also infer, so if we take it in terms of context, so if we disregard that what moving average it is, and we go and understand what phase are we in, then we see we are in that phase. They are very similar. So that's one of the different sheets of analysis or to determine which phase of the bear market cycle we are. And it seemed like it's this longest consolidation phase of every bear market cycle. So if you think of the bear market cycle as 2 legs down and 2 accumulation slash distribution zones, so like those consolidation zones, then there would be a setup that always plays out in all of bear markets. This is the first leg down, then you get some consolidation period as such, and then you get a second leg down, and then you get the accumulation zone here. Sometimes you get you find the bottom at the second leg down, sometimes you actually drop a little bit below it. But nevertheless, the second leg down does form the basis of the bottom for the bear market cycle. So basically, the current move we are in. That's the first leg down. That's the consolidation period that takes place. And we are forming right now the basis of the second leg down, right? Now, between every leg down, now we're gonna deviate a little bit from the moving average talk to just give you some context of an idea, and then we will come back to the moving average and all connect it together, right? So that's how usually bear markets move. One leg down, one consolidation, one leg down, and then I like to call out the last one is the accumulation zone, right? That's where all the long-term traders do accumulate their Bitcoins, right? And market speculators. So that zone right here, that's the accumulation beautiful zone. I'll show you one more example. First leg down, which forms, by the way, the support for the next consolidation phase, which is that one. And then we get the second leg down, which in this case formed the bear market bottom. Okay, and then you get that nice accumulation zone, and also like consolidation, and then you get the bull market phase. A beautiful, repeatable bear market structure that always happen. Now, also another thing we can add to this is how legs are formed. Okay, now let's go to a cleaner chart for the sake of studying that behavior. And we see something playing out also similar. This one will not only help you in understanding this video, but also understanding how price moves, you know, like how the continuation extension of price legs move. Because understanding the price structure is pretty useful in many areas. So you also get, so if we think of this leg down and we break it down into its components, you know, that first leg down that we talked about. So that's like the first leg down, that's the consolidation phase that usually happens after. So if we take that leg down, maybe I'll just increase that, move that a little bit, yeah, for you guys to see. You also get something similar. So you get the first leg down of the first leg down. Then you get a small consolidation phase, and then you get a second leg down before you actually find the bottom of that move. All right, so let's go and see if that repeats, especially for the previous bear market cycle, right? So this bear market cycle and the previous bear market cycle are very similar in price structure, and it's like a template, you know, like it's really rhymed in a very similar way. Since COVID-19, everything, you know, seemed to have shifted the whole universe, and price assets have showed that they do have a different personality to previously that is playing out now repeatedly. And I think we can use that market inefficiency in a way to give us an edge and, you know, have a chance against other market speculators, right? So to be a profitable market speculator, you basically need to know and have strategies and techniques that are better than the others, right? So you can have your edge, have your alpha, and your alpha is what will generate the revenue. I think this is an alpha, right? How after COVID-19, price behavior really just switched in many different assets that have a different personality that you can use and throughout, such as that one, right? So you get a leg down, a small consolidation zone, and then the second leg down of that leg down. So it does move in a similar way, and then you found the bottom for that consolidation zone, right? Of course, it doesn't always play out. For example, in the context of the bear market bottom, that was the FTX induced collapse, and you can see it just formed like that, and you found the bottom of that move. So it doesn't really always play out, but it's a good way to see things, right? Similarly, for example, you would take maybe that move right there, right? Like that, like that, like that, and similar here. So that's the idea. So if we say that right now we're playing in a similar way, since that's what happened even right here, right? Then, right? So let's say we do something similar. Then we should really go down, pause somewhere either here or here, go find resistance, and then continue our way down, right? That's what I would imagine for the first leg down to do. Okay, but is there some other points that could validate that movement to just say, oh, this structure is going to play out? Turns out there is. Okay, so if we go to a different set of analysis, if I could find it, yeah, right, that one. Then, oh, that's the price nibble I'm going to tell you about soon. Then if we go and analyze, for example, that leg down, okay, just basically that one leg down, or that leg down, or that leg down. If you break the bear market, as we had spoken, you know, first leg down consolidation, and that consolidation forms the kind of support and resistance line, and then the breakdown from that to the bear market bottom, or the bottom of the second leg down, because it's not always the bear market bottom, right? I know this is all heavy and meaty, but as more you watch this channel, as more you kind of get those ideas, and I believe those are ideas are, I know they are heavy sometimes, but to understand where price goes, we do just have to kind of analyze the averages and ranges of previous bear market moves, right? If that seems logical, to kind of understand the extent of the current move, right? So It seems logical to me, and not a lot of people do it. Therefore, by studying just the market structure, we can understand where we are. And to understand where we are on the map, we can understand where we're going. But understand where we're going, but without knowing the distance, is kind of also when are you going to take rest, and when are you going to eat, and when are you going to, how can you optimize your time? Well, understanding the distance is by measuring those percentage movements, right? So the map is the price structure, but the price movements are the distance so we can get to our destination. And we just want to be right about the direction of the destination, right? That's what market speculating is. So if we say that's the support of the consolidation zone, right? So that one right here is where we break down from. Then we just have to see how price behaved after that. And how price behaved after that is just crash down violently. I could be wrong, of course. And I thought we could go up, like probably to new highs, right? But I am 70-80% sure that I have conviction about the direction I'm taking. And this is just sharing my personal experience, right? So my conviction is to the downside, and this is the reasoning behind it. But it doesn't mean that price is going to go there. It means that one person thinks that, right? What that means as well is that you have the ability to consume that research and say, oh, is it valid or is it not? Is it full of, So that's your choice. But what I think is that we are there and the crash is coming. I'm just going to position myself accordingly. So far on this channel, we have been very correct about the whole movement, not the details. Probably a lot of details are going wrong, but the direction and the pauses and the bottoms and the peaks, we got a spot on. I mean, if you go back in channel, and then you will see those same boxes, those same data points right here, and we know that price will approximately top within that range, right? Just because we studied the statistics of previous bear market cycles, and we were like, and I was like, yeah, that's the phase, that's what it looks like. It. I could be wrong, but that's what I think from what I see. And what I see is what I believe, not what I hear from other people. And a lot of people on other social media are actually, the first tip to trading is actually not to take tips from other people, right? So you just take some of that data and analyze it by yourself. But listening to other people will probably make you lose a lot of money. I lost most of my money because I was listening to other people on YouTube, Spotify, or some other things, except books. Reminiscence of Stock Arbitrator, Market Wizards, best books out there. And those are the things that help me personally. YouTube does help me a lot in getting influence on my research, but I do not listen to people's targets. I do not listen to people's timings. I take the data that they say and I listen to that. So I do not like to make predictions, but those predictions are really for me. Those targets are for me, for my trades, and I'm just sharing them as a way of seeing how they would play out with time, right? Because I noticed I was right often about a lot of details, and I wanted to put that on YouTube so it would be like receipts, right? All right, so if we take the data, right, and we say we are here and we could go down, which is probably very unpopular with a lot of you guys that are there, but how many minutes? 18 minutes. We take this data, then we understand that from there to there, we could go down minus 45%. Oh, and that maybe I lifted it up later like that. Yeah. You see, the placement of this line is also very important, but very unknown. So you place it there, do you place it there, do you place it there? But that all becomes clear after the whole movement. So the whole price structure is really played out. For example, I would want to see some kind of resistance later around that line, and that would tell me, yeah, that's the correct placement, right? So of course, take everything with a grain of salt. Minus 45% is around this area, so that's at least the price have went before in history. But if you go to the worst period, it's 61%. But you can also see that with time, we are getting less severe with our drawdown. And since we are getting less severe with our drawdown, you can expect that we can be less severe now. And if you just see minus 47 to minus 45, we just 2% less. So that would put us around minus 43, right? Like you would say there, 36,000. But I think if we go down there, it's just going to be a wick. It's not going to be something major, but also my real target where I would, for example, I'm on shorting, so where I would close my position is around 42,000, half of it, and 52,000 is probably around the first half, because it is very difficult to know where the price will bottom. This is not really saying we will go there. This is one theory saying that I studied, right? So that's why I'm very confused of where we could stop, but I know this is just what I believe is this is just the half of the move, or at least we're getting to 40 to 60%, right? Half of the move. I think there's another leg down, and I think we're gonna bottom between 52,000 to around like 42,000, right? Due to that box. Now, previously we had done the same thing for that leg, and guess what? We had actually bottomed exactly at the end of the time and at the top range of that thing. That's why I'm putting a little bit above, right? Had done it before on this channel. We did something very similar and we got it right there, right? Similar thing here we're doing. So with that said, that's actually below the 300-week SMA. And I believe there's a possibility that we could find the bottom around here, 52,000. That's why I'm saying 52,000, is because we had found bottom there on the second leg down move near there. We broke from there and went down there, but here we broke from here, and I think we might just go down here, but it's possibly also to go down to the 42, which is around the 400-week SMA. That's why it's on. And the 400-week SMA fits perfectly with that analysis, kind of to a certain extent. And that's why I believe that those two moving averages will be next. And if you can notice, from bear market to bear market, we do go down. This was a COVID-induced thing. I know we should probably include it, but also that was a bull market. So it was a black swan in a bull market. We're studying the bear markets here. So in bear markets, we did find the bottoms, or the price bottom here. See, this was in the bottom as well. Around the 200-week SMA. Now, this could be cherry picking, this could be correct analysis, who knows? But I believe my methodology does work, and I'm gonna continue using it that way. That was the bull market phase, so it's a separate analysis, in my opinion. Yeah, and here we had found a bottom below the 100-week, 300-week SMA, and therefore I do believe maybe we could go down to, it would be just reasonable to think that price could go to 400-week SMA, if not below it, as we had done that before. We had done that. We had always been doing that, right? Except here we had actually bottomed at the same moving average, but this was kind of an extended bull market in a way, so that would also have to be taken into account. Interesting intersection. A lot of theories point a lot of different ways. I think finding the bottom of this bear market cycle is going to be extremely difficult, but not impossible. Nothing is impossible, not even in markets. The answer will be shown, and I do believe the answer will be within one of those theories that we have always discussed on this channel. So if you do want to just get a sense and another tool, a flashlight that will help you in your trading journey in crypto or in macro. So we also discuss oil and commodities on this channel, the stock market as well sometimes. If you want to get an extra tool to help you navigate this dark world of market speculation, then I hope you can subscribe to this channel and use us as your flashlight to your dark road. Thank you, and trade safe. Make sure to understand that risk control and capital preservation is everything in trading. But also, when you're right, make sure you're right. Make sure you add a lot. I'll see you in the next one.